Hi, and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the world of Bitcoin, taking a look at that most recent price action for BTC and what I think is likely to happen next. As I get into today's video, if you do find it useful and informative, smash that like button. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will not miss another video update. If you haven't yet joined us in Discord, what are you waiting for? Check it out. The link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's jump right down into today's video though. We'll kick things off with that 1 hour time frame. So here we have Bitcoin BTC paired up with USDT on the BitGet spot exchange. Following on from where we were yesterday and the day before, we were talking about the move to the downside. Our target was 26,974 to 27,153. We came down to the wick low of 26,966. This is actually a little bit deeper than you would have expected, and so we've got a couple of things to kind of keep an eye on here. So let's go ahead and do our due diligence. So we can see that we had this move to the downside. We have a 5-wave move coming down here. So I'm going to go ahead and draw this in. We can see this hits just short on the 1.618, actually looking at it. So I think we've got to probably see this as a slightly different move. Let me go ahead and take a look. It could be more to the downside for sure here before we finish the wave 3. So let's go ahead and check this. So I do think we are likely to, here. So hit the 1.618 here. I still think the wave 3 is not yet complete. So I'll show you what this looks like. We have a wave 1, wave 2, wave 3 coming down here, up for 4, down into 5. And this is all going to be an overextension in our 5th wave movement, because over here we have a 1, 2. All of this will be 3, up for 4, down to 5. And you can see that we're progressing quite nicely in this 5-wave move. This is all going to be a wave 3, in my opinion, with a diagonal this side. As I kind of zoom out of this quite a bit, we'll be able to kind of reflect on this kind of nesting down quite nicely. Now, there's a lot of movements here, and I know it can be complex to understand, but essentially what we're looking at here is a bearish trend to the downside for Bitcoin. Okay, this is now confirmed. We also have smart money concepts also indicating that things have now gone into a bearish state of play. This was from the previous bullish state of play, which was happening over here back in 27th of September. We now find ourselves in the bearish structure from smart money concepts. We've got the fair value gap that's been left behind here. This is an idea of showing you institutional money leaving the space. It's left behind this fair value gap. This fair value gap right here, this red pocket, this is created from a large sell orders happening here, not enough buying activity to fill those sell orders until the price comes down to the low side. So price has to drop to find the buyers if you've got large sell orders, and so that's exactly what you see occurring. Large amount of selling, not enough buying found down at this low range in our expected range. So we still are looking further down. I don't think we're done just yet. We might rally up a little ways further. We may come up into the fair value gap here. I do not expect us to fill the entire gap, but instead I expect us to move on down still further. Okay, so we're not yet done. Now, with the overextension to this, I can't give you any targets just yet until the wave 4 is done. So we'll keep a close eye on that and see if we can get an update out later today or early tomorrow. Let's take this out into the daily time frame, because this is right on track for our ultimate daily target lows at 22,477 to 23,787. Now, we're not going to be talking about a straight line drop into this 5th wave low point, but instead there will be rally as well. Okay, we'll have to rally twice, in fact. I look at this as our kind of diagonal. So the 5-wave movements that we're talking about over here on our hourly chart are building up into a diagonal space structure, or a wave 1 situation, I should say, really, over here in our wave 5. Okay, so we're looking for a 5-wave movement. Okay, so we'll have like a wave 1 coming down, and then we're going to bounce up probably back towards equilibrium and that $28,000 range before dropping down into a big wave 3, 4, and then 5 to get us into that target range, right? And what we're really doing here on our hourly chart is basically just building up that wave 1 position, and that's just this little area here. Okay, so there's a long way to go. We're not yet done, and of course, as you can see, we will expect bear market rallies. In fact, there should be 2 of them within this structured move to the downside. Now, this is if it's an impulsive run, there are other options as well. We can, of course, see more diagonal-based structures, which are a lot more in the overlapping structure and would have much more significant bear market rallies in these two particular locations. Okay, and again, these will also be made up, diagonal structures anyway, can be made up of three-wave patterns as well, which means you may, in fact, even see a little bit more volatility here in both directions, basically grabbing a lot of liquidity out the market. It's too soon to know whether this is going to form a diagonal, whether that is a ending diagonal, contracting or expanding, or whether it's just going to be a straight up impulsive move to the downside that completes this fifth wave target. But right now, at the point of recording this video, we're on track for the $22,000 to $23,000 level. It is going to take some time. It's probably going to be into November by the time we see that one play out. But we'll see how that kind of plays out. Ultimately, right now, we're finding brief support on the 200 daily EMA. That's $27,020. We are back below the 50 EMA at 27,150, and we're above the moving average there at 26,621, the 50 moving average. Ultimately, we got rejected on the equilibrium, which is the 50% move from the swing high, swing low areas. And of course, we have our upper area of resistance between 28,294 and 29,176. So for now, it does look like we are finding the heavy resistance. We're going down into the fifth wave movement. And you'll remember from previous videos, we were talking about the breakout potential. That is getting harder and harder to see. It's still possible though. We can still potentially see a breakout situation here for Bitcoin. It was break out of this particular bearish trend that we find ourselves in, we have to rally up higher than 28,588. That's the white line that's coming across here, and that hasn't changed. That is a number that we need to be hitting to break out of the bearish market into a temporary bullish one. I do think it would be temporary though, so we'll just keep a close eye on that. Obviously, there's the possibility that we can break this structure and rally on up. At the moment though, it's not looking strong. If we do close below the 200 EMA, the bears will gain control once again. Take this out into the weekly, and of course, we have the higher highs, higher lows, and the breakdowns. These are something that we note from time and time again. And so we'll this yesterday, we can see it right here. We're finding brief support on the 50 EMA on the weekly chart at 26,894. So that's going okay right there. A big move to the downside would be seen here if we were to close this. Again, we're looking at support really coming in at around this lower level just here at 25,800. That's going to be the area of real level of support. If we kind of throw this all the way back here, you can see that this is the support line. So we're going to move down quite a bit. 25,859 is not our daily target range, so this could just be a bounce location. If we were to lose this area of support, then we are coming down, testing that 200 EMA, lose a 200 EMA, and really we've got a long way to go at that point, back down towards $20,000, and obviously the CME gap down there as well. So for the most part, we're looking, I'd say, bearish. Now, of course, we do have the idea here of a potential head and shoulder pattern forming on our weekly time frame. Again, this is if you do not follow things like Elliott wave theory, stuff like that. If we were to kind of draw this in, just to kind of give you an idea as to kind of what this looks like. It can be something to this effect. Okay, so just kind of bear that in mind. There's lots of different ways that things are playing out here. A lot of these patterns are exactly the same things. They're just kind of communicated differently. But ultimately, for the most part, we are looking bearish. Momentum on our weekly chart has risen a bit. We've still got some momentum to the upside to be seen here, but we don't have to. As I was talking about previously, if we draw a trend line in here, we can see that this is the area of resistance coming in on our stochastic RSI, as in we can potentially see a pivot, a turn in the market, and that's kind of where we're seeing this right now. So we'll see how price reacts to the 50 EMA on the weekly. We'll come back into that daily for a second. We can see that the 200 is acting as support, but we are trending down ultimately on the hourly, which is building us up into these nice bearish positions where we can, of course, short the market. But I'm thinking it's probably better to wait on the next kind of pattern structure on the hourly before we jump in on any trades. But if we were shorting from the top there, then we're still in pretty good positions. We can use a trailing stop, etc., to make sure that we don't end up in any losses. Guys, that's going to wrap up today's video. If you do find it useful and informative, smash that like button. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Just a gentle reminder, I'm not a financial advisor. No, I cannot offer you financial advice. Everything I am doing in these videos is for educational and entertainment purposes only. And if you do have access to a financial advisor, you should probably consult your own financial advisor. Ultimately, this is just my own personal thoughts and opinions on the data in the charts as I personally see it. Until the next one, though, guys, have a fantastic day.